12% dividend yield from Australia from an oil explorer that almost no one has on their radar, Horizon Oil. Market cap under 400 million Australian dollars. They produce in China, Australia, and also in Thailand, and they sit on a huge gas field in Papua New Guinea with 290 million barrels of oil equivalent in reserves. Sounds like the perfect small cap dividend play, but, and here's the catch, the payout ratio is over 300%, so they're paying out 3 times more in dividends than they're earning. And that's what we're going to clarify today. Is this a bargain or an F or a trap? And as always, we'll look at this without any marketing spin. Horizon Oil is an Australian upstream player, founded in 1969 and headquartered in Sydney. And they operate in 4 countries. First, China, Beibu Gulf, offshore oil production for years, and this is their oldest cash generator. Australia, Mereenie field in the Northern Territory. They bought a 25% stake in 2024 for $27.6 million. Oil and gas discovered in 1964, a solid brownfield site. Thailand, former ExxonMobil asset Sinphuhorm Nam Phong gas fields acquired in August 2025 for $30 million. Produces 2,000 barrels per day. In addition, PNG, the Stanley gas project. Elevala and Ketu fields, 290 million barrels of oil equivalent gross. And that's the jackpot if it gets developed. Together, they currently produce over 5,000 barrels of oil equivalent per day. For a microcap, that's really quite respectable. And now let's take a quick look at how I'm invested here. We also briefly had a payday on April 17th, specifically with €9.68. That currently corresponds to the net dividend. A quick note in advance, of course, this is a very small position simply because, let's say, I'm roughly factoring in or just hoping that maybe Horizon Oil will even get acquired or that it will grow and gradually establish itself a bit so that I can position the holding more significantly here. But at the moment, for me, it's more of a small speculation with a very nice dividend right now. So I entered at 11 cents. I now hold a total of 1,060 shares. Currently, the price is 15 cents. That corresponds to an unrealized gain of about 30% and a net dividend that I have already received of €19.68, which all in all is roughly 10% net. Let's just take a quick look here as well. The dividend in general is about 12 cents, and we can see that it is distributed semi-annually, so to speak. The second distribution will probably take place here in October. Now, let's take a look at the fundamentals using Investing Pro. Currently, Investing Pro is offering a flash sale. You get a 55% discount, and through my affiliate link, you get an additional 15% community bonus on top. You can find the affiliate link below in the pinned comment or in the video description. Let's move on. Mereenie, the cash anchor. Mereenie is a conventional oil and gas field in the Northern Territory. Discovered in 1964, in production since 1984. Horizon owns 25%. The operator is Central Petroleum. What does it deliver? Plus 1,100 barrels per day, 6.4 million barrels 2P reserves. Gas is transported via the Northern Gas Pipeline to the Eastern Australian market. Oil and condensate are transported by truck to Port Bonnetton and exported to Singapore. The great thing, brownfield, low capex, predictable cash flow. Exactly what a small cap needs to finance its dividend, or at least should have. Now let's move on to the Thailand deal, more in 2025. Horizon is buying ExxonMobil's Thailand assets. Sinphuhorm, a conventional gas field with condensate, plus Nam Phong, all onshore in northeastern Thailand. The purchase price here was $30 million for Horizon's 75% stake, plus up to $7.5 million in contingent payments over 6 years. And that's cheaper for 2,000 barrels per day and 3.9 million barrels of 2P reserves. ExxonMobil is selling off smaller assets, Horizon is picking them up, and we know this pattern. When a major sells and a small cap buys, that can be good or bad, and here it looks solid at first glance. Producing fields, known geology, and manageable capex. The 52-week high and low here, well, it's not exactly measured between, well, let's take another quick look. It's just a very small stock, so it's not traded that often. But here we have a 52-week high and low between 10 cents and 18 cents. Investing Pro sets a fair target here of 14 cents. Now let's move on to PNG and the so-called sleeping giant. And now it gets exciting. Papua New Guinea horizon is located in the western province, covering 7,900 square kilometers. Stanley, Elevala, Tingu, Ketu, all gas fields rich in condensation. They are paying 290 million barrels of oil equivalent gross to 2P and 2C reserves and resources. Net for Horizon, that's approximately 80 million barrels. With a market cap of under 400 million Australian dollars, you're sitting on an asset here that alone could be worth more than the entire company. The catch, it's simply not in production yet. Development requires massive capex, LNG infrastructure, pipelines, all of it in the jungle. And that can also take years. But if it happens, 140 million cubic feet of gas per day plus 4,000 barrels of condensate, and that would really be a strong game changer here. Now let's move on to the cash flow and the dashboard. Currently, revenue is $105 million, down 5.5% compared to the previous year. An EBITDA of $79 million with a margin of 52%, and that's strong for a small cap explorer. But earnings are only $12 million, which is down 53%. Here, depreciation and acquisition costs are simply eating up the profits. Balance sheet, 44 million euros in debt, 36 million in cash, debt to equity at 85%. Not exactly conservative, but the debt is currently well covered. Operating cash flow covers 97%, EBIT covers the interest 3.4 times. The first half of 2026 was better. Production up 26% thanks to Thailand. If prices hold and Thailand contributes fully, the next figures will look significantly better here. Now let's move on to the dividend, which is just under 12%. First, the elephant in the room. 2 cents per share paid out semi-annually, as already mentioned, and that's with 10 or currently 15 cents. But the payout ratio is over 300%. That means Horizon is paying out 3 times more than they earn. The cash payout ratio is even at 318%, and that simply can't work in the long run here. The dividend is currently being financed from the cash flow of the acquisitions. Mereenie and Thailand are bringing in cash. If production ramps up fully in the second half of 2026 and oil prices stay above $80 as we are currently seeing, the payout ratio could normalize. But if prices fall or PNG capex eats up the cash, then a cut could happen here. And that means I wouldn't consider the dividend to be safe, which is why I'm going in here with a small risk. Now let's move on to my valuation and also to the risks. Market cap is 390 million Australian dollars with an EV/EBITDA of about 5. For a producing explorer with 290 million barrels of upside in PNG, that's cheap, actually very cheap at the moment. In the bull case, Thailand and Mereenie stabilize the cash flow and PNG development begins. The reserves alone could make the company worth 2 to 3 times as much. Oil prices remain high due to Hormuz, making the dividend affordable here. That's also what many are saying. If Hormuz remains closed until June, we're looking at a full year of $100 Brent prices for 2026. Bear case. PNG is delayed by years. Massive capex without return. The payout ratio forces a dividend cut. Shiner assets finally have a lifespan. Australian dollar fluctuations and microcap status in Australia mean liquidity is simply thin here. So, what is the final conclusion? Horizon Oil is a watchlist candidate. The valuation is cheap, the PNG upside is real, but the dividend is currently on shaky ground. That means I simply wouldn't buy blindly here. As you can see, I really only have a small position and would just wait for the second fiscal year 2026 to see what numbers come in then. And then you can continue to analyze and plan your next step or your entry. If you enjoyed the video, I would appreciate a like at this point. If you're not a subscriber yet and don't want to miss any more episodes, I'd appreciate it if you subscribed. Otherwise, you can of course sign up for my newsletter at any time on my website, mbcapitalstrategies.com. The newsletter always goes out on Sundays. There you'll receive an informed summary of the week's events, a recap of everything that happened during that period, and a little insight into my portfolio, so to speak. Plus, you can actually see all of this on YouTube as well, but if you just don't have the time to watch, then this would be a good alternative. Then you can just read through what happened in 5 minutes and don't have to watch the video. Otherwise, of course, I'm also happy if you watch the video. And as always, the following applies. This video is not investment advice, but simply my personal strategy. See you in the next video. I wish you all successful investing.